Alrighty, today we will be going over the trading sessions, the higher time frame power of 3, and time alignment. So, big day today. I hope to don't information overload you guys, but this will be definitely a good episode. So just keep track with me. If you guys got questions, please ask them at any time, any moment. But let's go ahead and get started. So the first thing we'll be going over is the trading sessions. So you guys have seen me use these a lot. The trading sessions, they are very, very useful. I think they're one of the most overpowered things within trading just because they can help you find your bias literally in a split second. I use it to find my bias every single day. I don't really use many other things except for the trading sessions to find my bias, and you guys will see exactly why. So every single day when I come on, I mark the Asian highs and the Asian lows. So we have Asian highs and Asian lows. So if you guys see, well, London took out the Asian highs, as you see. So we now have, we'll go back to 9:30 to like start the day, which is what I look at when I come into the market. 9:30. So I see, okay, Asian lows and Asian highs have been taken. So I'll go ahead and mark out London lows or London highs and London lows. Okay, right. So if I see this, there's two things that could happen, right? We could easily just take these lows and keep pushing lower, or we could take these lows, push higher, or since we've already taken out Asian lows, we can just keep pushing higher through London highs. So let's go ahead and like look at past data and understand like why this works and how it works. So this is today. Let's see yesterday. So yesterday's perfect example. What do we have? We have Asian highs gets taken out pretty early on. Then from here, what can I look for? Well, I can just assume London lows or Asian lows could possibly be getting taken. And as you see, boom, Asian lows get taken there. So now let's see another example. As you see, Asian highs get taken here, but Asian lows do not get taken. And we kind of just keep pushing higher. So it wouldn't have worked there. Let's see here. Example, another perfect example. Asian highs get taken. What can we now assume now? Okay, Asian highs or Asian lows will be taken. As you see, boom, Asian lows get taken. Let me find another example. Another example that wouldn't have worked too well. Again, another example, Asian highs get taken. What do you assume to happen now? Asian lows get taken. Let's see if we can find an example where Asian lows get taken, then highs get taken. Wouldn't have worked there. Would have worked here perfectly, actually. Asian highs taken, Asian lows taken. I want to find one where lows get taken, but then highs get taken. Okay, so we get cut off there. But as you see, this phenomenon works almost every single day. What, out of 1, 2, 3, 4, 5, 6, 7, 8. So out of 8 days, like 3 days, it didn't happen. But through those days, you can still easily find a bias. So you might be wondering, well, why does this happen? Well, if we go back to a couple lessons ago, what do we need to see to happen? Well, for the market to move, we need to see orders get taken at the highs or lows, and then those orders will get taken, and then their phenomenon repeats itself, and then vice versa, right? So if that happens all the time, how can you capitalize on it? Well, just as I was saying, if you see one of the session lows get taken, what can you do? Then you can look for the session highs. So let's say the Asian lows have been taken, the Asian highs and the Asian lows have been taken. Well, what can you do from there? All you have to do is then move over to the next session. Well, now we have the London session. So now you can mark out the, let's go back to replay from 9:30. You can mark out now the London session highs and lows. And then, as you guys know, today the London highs then eventually got taken throughout the day. And then the same thing can happen here. Well, that's like a good example of the Asian lows being taken and the Asian lows being swept. Let's see here. 9:30. Doesn't look like the Asian lows get taken here, but then, or the London lows get taken, but then the London high gets taken again. Here's a good, or that's a good example of Asian being taken. Let's see. This phenomenon happens all the time, and essentially if like one of the Asian lows or Asian highs gets taken both ways, then you can just look for the London highs or the London lows to get taken. And you can repeat that process over and over, and it's just because of what I was talking about earlier, to take orders, well, to move the market, we must take orders first and then move higher, and that's exactly how that works. Essentially, that's how I find my bias every day, is just look at what session lows or highs have been taken, and then determine my bias based off what I will think. If I think then the highs or the lows will be taken again, or just if we'll keep pushing higher throughout those lows, so on and so forth. So let's say, for example, there's a lot of like occurrences that can happen out of this. Let's say, hold on. Okay, so we have the Asian session forming, right? And then we have the London session forming. Let's say the Asian lows never get taken and we just kind of keep pushing higher in Asia or in London. You can probably assume, okay, yes, we have these Asian lows that could be taken, but say like we're trending towards all-time highs, I could just very easily assume that this will be a continuation trend and London or New York will just come in and keep pushing higher. So that can then be used to the downside as well. So if there's just a very clear target, you can then assume the next session after Asian and London will essentially just be a continuation, or it'll be the manipulation, aka the power of 3, where this is just manipulation taking out the highs, and then New York session just pushes lower. You can use that type of sequence over and over throughout every single session, every single market, and kind of keep doing that. That's pretty a basic concept, but that's essentially how I find my bias, is just looking at what session lows and highs have been taken and where can I target depending on which session high or low has been taken and which session to target, either that's the high or the low. Do you guys have questions on that part of it so far? I prefer the Asian lows and highs over the London, but again, if the London has taken Asian lows and highs, then I'll just look for the London highs or London lows essentially. But yes, I prefer the Asian highs and the Asian lows over the London highs and London lows every single time. If a previous session was already sweeped and London took Asian lows, is the low not as valid anymore? Yes, so once a London low or Asian low, so if we do this, say this is Asian lows, London then comes in, sweeps these lows. Yes, I'm not going to look for these lows again because they've obviously been taken. So from here, if I think the market will keep pushing lower, I'll find a target that's down here. But if not, and there's a target all the way up here, and we still have Asian highs here, then I'm going to assume that then we'll come back and trickle up through these highs and then possibly take out that target. Yes, so I actually use those all the time. People will be like, bro, why are you marking out the highs and lows if they've already been taken? For this exact reason, right? Say if we have the low down here and this is Asian lows, I can assume we might reverse off of this high or low and then keep pushing through. And that's like usually a good reversal point. And then that can be used to the other side as well. So they can be used as rejection points, they can be used as sweep points, they can be used as targets, they can be used as a lot of things. And say, for example, my bias is to the upside, and we kind of get this, Asian low has been taken here, or Asian highs, Asian lows, and I'm thinking we're doing it, or we're going higher. London comes in, we come in, take this. I can say, okay, I didn't want to look for these lows, but if we react strongly off these lows and immediately push back up, I can assume then we'll take these highs and maybe even take this target just because of how we reacted off that low. But then again, if we take that low and just keep plummeting on down, I'll just assume, okay, we're probably going to push towards something lower here, and the market will most likely keep moving lower. Like today, price went to New York highs, which also ended up being in 1 hour fair value gap after taking out lows, then did not immediately reverse towards Asian high. So yeah, today was actually, when I was on the call with Big Racks Jay, I was talking about how today was actually a really good example. I wish I traded today, but it is what it is, right? So as you see, what did we do today? We took out the lows, right? And then we had Asian highs here. Then we also had a data wick here. If you go back to 9:30, this is actually the London high is actually here. So not only do we have the London high here, but we also have a data wick. A data wick is basically a news candle that makes like a very strong wick essentially. So what do we have here? We have a London or Asian high here, London high here, and the data wick there. So that makes a super high probability. So as you see, we came down, absolutely swept Asian lows. So from this point, after we're already moving up, I can assume we're probably going to come take out these highs. So as you see, right, what did the price do? It came through the Asian lows, and then it immediately tapped back into those Asian lows and kept pushing right on through. It went immediately through after rejecting off those Asian lows. And what are we going to see it do? Well, price is going to go straight through those highs and push even higher actually. And then as you see, look, to the candle, to the wick, it taps back into that low and keeps pushing higher. And boom, that would have been your trade right there. So that's exactly how you can use it. So basically a data wick is an important draw of liquidity, or how do we treat it? Yeah, so basically a data wick is anything that is coming from a news event. So as you see, it's just kind of standing out. Like if you look at this candle compared to the rest of the candles, like this wick stands out, the body of the candle stands out, and that is from CPI news, I believe. So CPI news or PPI news came in, made this crazy candle, made a crazy wick. What do we now have? We have a very easy target. It stands out amongst the rest. There's a lot of orders that are resting up here, and as you see, price draws right to that and takes it out. So the reason I have them set the way I do is, I don't know, just when I first started trading, I kind of like just had these hours set. And now I just use them all the time because I don't like how there's like most traders, right? They'll have like Asian session, then they have a big gap, then they have London session, a big gap, and then New York session. I like kind of the overlapping. When I first started, I would look for a trade when London session was overlapping with New York session, which is kind of like that 9:30 to 10:30 range. But then I realized I don't really need that. I can just kind of look for just any trade at any moment after 9:30, and that's kind of why I use these times. It's just I've now kind of catered to these times, and they work very well for me because technically London session does run into the New York session, as same as Asian does. Asian runs into the London session, so it would only make sense to have the full session marked out rather than just like a piece of that session marked out, if that makes sense. So yes, I do have kind of my own session times, but the session times work very well, especially as you see here, literally to the candle wick, it taps into that London low or that Asian low again, and pushes higher. So yeah, the sessions are going to be one of the most crucial things you can use in your trading, whether that's just to find a bias or whether that's to just find a trade, or whatever it may be. Finding your sessions and just finding targets is going to be one of the most crucial things you can use in trading, and it's going to train your trading a lot and really help you down the line. So moving even deeper, we'll go into the higher time frame power 3. So you guys see this candle here. You guys probably are like, bro, what is that candle? Like, how do you use it? So I don't use it as much anymore, but so say if 9:30 comes into play and I don't really see any setups forming, I'm just like, okay, there's nothing really happening here. Yes, there was actually some trades here that you definitely could have taken, but let's say nothing's really happening. We're coming close to 10 o'clock. Essentially, the candle that you see here, right, is the 4-hour candle. As you see, this candle spans all the way to when it started, all the way about at 6 o'clock, and this candle goes all the way till 10 o'clock, and then a new 4-hour candle gets put in. So how can you use that in your trading? Well, you'll see right now. So as you see, 9:59, new 4-hour candle is about to get open. So 4-hour candle gets open. Whenever a candle, or especially a higher time frame candle opens up, you don't want to see a candle just open, right, and then just immediately make a body straight up, right? That's not really what a candle does. As you see, a lot of these candles here, they're not just candles with no wicks on either side. Almost every candle has a wick to the downside and the upside, and then a body in between. That's exactly what you want to see here. When the 10 a.m. candle opens up, what do you want to see? Well, if you're looking to the upside, as you would be here, you don't want to just see the candle go straight up. Obviously, there are times where it just does that, But what you can do is say, okay, I want to see a wick get put in. As you see, it's trying to put in that wick right now. Boom. Okay, boom. This is perfect. As soon as that 10 a.m. candle opens up, if we're looking higher, you want to see it open up to the downside. You want to see the candle put in a wick, so then you can essentially catch the whole body all the way up and catch this as your trade. That is what you're looking for whenever you're using the higher time frame power of 3. You can make, people use this as a model entirely. People just use the 10 a.m. I used to use it basically only until I realized there's a lot more trades I could be taking before it. But now I use it as kind of like a backup. If I don't see trades opening up at 9:30 to 10, then what do? I wait till 10, and now I just wait for this type of setup to form. So essentially, as I said, you want to see that wick get put in. Once you think that wick has been put in strong enough, then you can say, okay, we have a 30-second fair value gap here. I could say, okay, now we're kind of reversing out of this. Let's see what we do from here. Okay, boom. It's kind of manipulating through still, so I'll just kind of wait until we have something very obvious. And then, as you see, boom, right here, you could take your trade. So let's say hypothetical right here. There's a very obvious wick that has been put in. The new candle body is starting to form. So let's see what would happen out of this. And as you see, your TP would have been smashed if you were just targeting the London highs here. So that's how I use the HTF Power 3, is essentially you can use that on the 10 a.m. candle. You can use that on any 4-hour candle, just that concept alone. That the candle, when it opens up, it has to put in a wick to the upside or the downside. And then if you're targeting to the downside, then you want to see the wick be put into the upside first before catching a move to the downside. And then vice versa, if you're looking to the upside, you want to see the wick be put into the downside before catching the move to the upside. And you can literally do that across every 4-hour session. You can do that at 6 in the morning. You could do that at 2 in the morning. You could do that at 10 a.m. You could do that at 2 p.m. You could do that at literally any time that works for you. You can use this concept to catch your trading. So let's go all the way to 2 p.m. and let's see kind of what happens then. Let's see. So we'll wait all the way till 2 o'clock to see when we get that new 2-hour candle open up, or 4-hour candle, I mean. I have no idea what happened at 2 o'clock, so this is going to be basically completely off the top of the dome. But as you can see, right, this candle has a very clear wick and a very clear wick to one side. It wouldn't make sense for just a candle, like it can, obviously, if we're just pushing highs or pushing lows, yes, it can just make literally the smallest wick and just push straight through. But the probability of that happening is not very high. It's very probable that we're going to get... it's very probable that we're going to get a wick to the downside and a wick to the upside. So if you get a situation like this, right, you see it opened up, there's no wick here. I can say, okay, even though we're targeting lower, I can assume at some point we're going to put in a wick here. So I'll just wait for a setup that presents that self. So let's see. As you see, we are just trending lower, 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 lower. So in this situation, yeah, you'd probably want to use like a 5-minute or something, 5-minute fair value gap to see if we'll actually push higher. I have no clue if we do or not, but I'll see if we maybe get anything that tells me that we might push higher. Okay, so maybe here you could look for sign, but I want to see a retracement now at this point, which we get that exactly. Then possibly if we close above this range, that could be something nice telling us we might push higher. So right there, okay, hypothetically, I have no idea if this will be a good trade or not, but we'll go higher risk, or like a bigger risk, and basically you can just target that and let's see what happens. It's on play, and boom, we would have been stopped out. But I can assume at some point within this 4-hour candle, I would have been break even there for sure, but at some point within this 4-hour candle, we most likely will put a wick into the upside. Again, I have no idea if we do, and boom, we don't. So maybe for the rest of the day we could trend up, maybe put in a wick, but if not, what can I assume? Most likely at the open, we will probably push to this high, like when the market opens, because the market, did it close yet? I think it did. Yeah, the market is closed, so at some point when the new candle opens, I could probably assume maybe we'll take out these orders and then push to maybe take out this high, because there's a lot of orders resting up here, and then maybe trend around. Yeah, so it exactly as you said, Rat, the probabilities of that happening are super low. It's a 1 out of 10 chance that the wick doesn't get put in at some point, and that's why that concept is very, very high probability, because most of the times 9 out of 10 times the wick is going to be put into the upside and downside, and you can catch a trade to either one of those sides just depending on your bias and kind of what you're looking for. You guys have questions on that so far? It's a very simple concept, and then that kind of leads me into time alignment. So time alignment goes into a lot of things. It correlates into the 10 o'clock or the 4 hour because, okay, say if we go all the way back to 10:30, or let's go to like 10:58, right? Say if you're looking to take a trade right here, let's say, okay, I like this trade. Let's just say you had no idea where the market was going. You're like, all right, yeah, I want to short this. Okay, well, the 10 o'clock candle is going to come out, right? It's going to come out now. Okay, boom. 10 o'clock candle is going to come out. Let's just say, actually, hypothetically, let's say you actually took this trade. To the upside. You had no idea about the 4 a.m. power 3, right? Or 10 a.m. power 3, and you're like, okay, I want to take this trade. Well, what's the 10 a.m. candle most likely going to do? It's going to open to the downside, especially if it wants to go up, right? So your probabilities of you being in this trade that's actually going to work out, yes, it can work out sometimes, but most of the time, since it still needs to put in that wick, what's going to happen? You're probably going to get stopped out. Boom. Just because you didn't know that the 4 hour candle was going to open up. Now the 4 hour candle's opened up. You've been a 10 a.m. Wick has been put in, and now you're like, shoot, I've been stopped out. But in reality, if you just waited for that 10 a.m. candle to open up, if you actually knew what time it was, you understood that this opens up and does this, then you could have waited just a little bit longer to wait for that low to be put in, and now you can catch the trade all the way to the upside. But then this goes even further, right? Let's say time alignment. There's a lot of things that go into time alignment. The number one thing that I see a lot of earlier traders fail with is if they're a 30-second trader, especially if they're early on, they don't understand that the 30-second is also made up by a lot of other things, right? The 30-second makes up the 1 minute candle. It makes up the 2 minute candle, right? There's a lot of things that go into play. There's not going to be a great example here, but let's just say two scenarios, right? You have the 30-second and the 1 minute, okay? We have this, we have a fair value gap here, right? And on the 1 minute, we have a fair value gap here. The 30-second candle has closed below. You're like, oh, that's an inverse. I'm in on this. Let's go. I'm shorting this, and let's see what happens. Versus the 1 minute, there's still 30 seconds for this candle to close, right? The next 30-second candle could look like this. It goes straight back up because the 1 minute actually just wanted to reject off this fair value gap and keep pushing higher. So how can you counter that? Well, there's a lot of times, depending on how strong your bias is, if we inverse one gap, then you need to understand, okay, there's still 30 seconds left to close in that 1 minute, and in that next 30 seconds, we could easily come out of that gap and actually just reject the gap and push higher. So how can you master this? Well, if your bias is strong enough and we inverse 30-second, get the CIST as you should, then yes, you can look for this trade. But if you have proper time alignment, right, you have the 30-second and the 1 minute, say we have that same scenario, but instead there's only 30 seconds left in the 1 minute candle, right? There's only 30 seconds left, which means only one 30-second candle would make that up. Let's say this is the first 30 seconds of the 1 minute, and then the second 30 seconds of the 1 minute is that inverse. That would then make the 1 minute also valid because you then get the inverse on the 1 minute closing below, not only on the 1 minute and the 30-second, and that would make that trade super valid because now your time is aligned. You don't have 30 seconds left in the 1 minute. Now you just have a whole new 1 minute candle and new 30 seconds candles that are opening up together to make some sort of move after that. Now, obviously, the 1 minute and 30-second could then just go like that, and boom, now you're screwed. But you're gonna have way more high probability if you just wait for that time alignment and wait for that 30-second entry when there's only 30 seconds left on that 1 minute, versus if you try and take the first 30 seconds of the 1 minute off the inverse and then there's still 30 seconds left for the 1 minute to decide what it wants to do. Does that make sense? Okay, then going even further into that, you can then also, so remember how we were talking about the 10 a.m. PO3? Well, I always have the 5 minute and 15 minute pulled up on my screen, and there's a reason for that. Okay, say we have a beautiful setup here, right? But now we have just opened up. Oh, it's not going to properly work, so I'm going to have to show you guys a real example. So say let's say, okay, it's 4:33, right? So it's 4:30, okay? And we've done this. Boom, you get a CISD with 30 seconds left. Again, there'd still be 1 minute left in the let's say this is out of the 5 minutes, right? And then on the 5 minute candle, there's still 30 seconds left for it to close. So say you enter on this, there's still 30 seconds left. You could easily, in that last 30 seconds, keep pushing higher, right? But now, in that next 30 seconds, what's going to be opening up? The 5 minute candle is going to be opening up. So let's go back to the 10 a.m. po3. What do we expect all candles to have? You expect them to have a wick to the upside and the downside. But now if we have a new candle opening up right here, what can you expect out of the new 5 minute candle? Well, it's most likely going to push lower, especially if you want it to go higher, to form that candle, put in the wick of the 5 minute, and then it might push higher after putting in that wick. There's a lot of times I've been screwed over because I've entered in a little bit too early, where there's only a couple seconds left in that 5 minute candle, or the 5 minute, 15 minute, whatever it may be. And now, because you entered just right before that candle opens up, now the wick is going to be put in on that candle, and you have a potential to get stopped out. Now, obviously, there are times where the wick doesn't get put in very well, just like how we saw that example of the 2 p.m. 4-hour candle being put in. There are times where that can happen, but the probabilities aren't in your favor, because you might as well just wait. Okay, if there's 30 seconds before the new 5 minute candle, wait for that 5 minute candle to be put in, wait for that wick to be put in, and then wait for it to reverse to put that body in and catch that move of the body, making it a lot more high probability. Because if you just try and catch the move right before the 5 minute candle opens up, well, the probability of it just going straight up is meh. Like, yes, it can happen, but I'd rather just wait to see the 5 minute candle wick down and then wick up and give me the move that I want to catch. Does that make sense? And then the same thing applies to the 15 minute. The 15 minutes even more you should wait for it. If we're coming into a new 15-minute candle, that's a way bigger candle. That's 3 5 minutes together. So definitely wait. If we're near a new 15-minute candle, wait for that 15-minute candle to open up, wait for that wick to be put in, and then catch your move. Now, okay, if we're getting a strong CISD on the 5 minute, like it's very clear momentum shift, it's very clear that we're pushing up, then yes, go for the trade, especially if it's aligning. If it's aligning with the 5 minute and the 30 second and whatever you're trading on, go for that trade. But if you're a little skeptical and you're not totally sure and the 5 minute doesn't look perfect, then wait for that 5 minute to open up, wait for that wick to be put in, and then catch your trade. Don't try and force it. If you're near something, then go for it. But I feel like my ideal time is like 30 seconds to a minute after the 5 minute or 15-minute candle has opened up, and then within like that 3 minute range, from like 1 minute to 4 minutes is a good time. And then once you're like a minute away or 30 seconds away from a new 5 minute or 15-minute candle opening up, just wait that extra minute or extra 30 seconds for that 5 minute or 15-minute candle to be put in, wait to see what happens, and then go for your trade. And then that also ties to if it's a new hour coming in. Obviously, the session I trade, the new hour that gets put in is always the 4-hour candle. So the 4-hour then aligns with the 1 hour. So usually that doesn't apply too much to me. But if you are someone who trades outside of 9:30 or outside of 10:30, and you're coming into 11, or if you're coming into 9 o'clock, wait for that 9 o'clock candle or that hourly candle to get opened up, put in the wick, and then catch the body. Or same thing with like coming into 11 o'clock. Or whatever time it may be, wait for that candle. Because think about it, also when the 1 hour opens up, also 5 minutes opening up and a 15 minutes opening up, so you got 3 candles to be looking at that could possibly have a wick be put in and then push higher. Yep, so these concepts, they help so much. They help my trading immensely. When I realized that the time alignment is a huge thing, especially trading on the 30 second. If there's still 30 seconds left in the 1 minute and there's a fair value gap that it's dancing in, wait for the closure of that 1 minute to then fully get your confidence to be like, okay, yep, this looks good and I'm going in. Yeah, it's not really something that you think about until it comes up, you know. Can I send my trade I took this morning? I think it shows a 5 minute candle you're talking about, because I saw it wicked and then on the 1 minute I saw it had already started to move up. Yeah, go ahead and send that trade and I'll take a look at it. Okay, let's see. By the way, MNDZ, were you able to get real-time data? I see your trade. Okay, so both of these trades, they look super valid. I can't really tell what time they are, but I mean they look good to me. I would have waited on that first trade. If you can see my screen, let me see. Share my screen here. So if you can see my cursor, this trade right here, I would have entered on this candle, at the top of this candle, even though it's like not as, even though your setup was actually better, I would have waited for the top of that candle to be put in, then would have entered. And then this trade, I would have waited for the closure of that candle and entered. But both those trades are super valid and definitely are good trades. Not yet, didn't find it. Okay, I might have to help you maybe off stream or something. But both those trades were perfect. Yeah, so like obviously, like there are times, like there's plenty of times where I take trades right before the 5-minute candle opens up, just because I know what's going to happen. But then obviously that ego can kind of get to you when you think you know exactly what's going to happen. Those are times where you can get screwed over and then you actually get taken out of the market. But there are a lot of times where it is just so obvious that it'd be dumb to not take the trade, if that makes sense. But at least then when you get taken out, you know what you did wrong. If you get taken out and you're not just like, bro, why did I get taken out? The buys are so obvious. Well, then you can be like, okay, well, the 5-minute hadn't opened up yet and hadn't put in that wick. So it gives you a reason to then go back and understand like why and what you did wrong, essentially. Yeah, I mean, that 5-minute looks good because you already put the wick in. Therefore, we're pushing higher, and that's a good trade. Yeah, good shit. Good shit. Y'all got any more questions on that or anything? All clear, perfect. Yeah, so all these concepts essentially work into each other, whether it's the session concept, the 4-hour po3 concept, or the time alignment concept. They all come in together into one. The sessions maybe not so much, but it still involves time. Time and price is a huge thing, and once you kind of get time and price down, you're going to be a very good trader. Yeah, once you start using it in depth, you're going to be very well off. I can promise you that. The second trade was perfect too. Me and Big Racks Jay were literally just on, and since I hadn't traded today, I just took all the hypothetical trades I would have taken, and I took that exact same trade. Because you get a very quick break-even point. As you see here, if you enter here, you can actually get, if you enter it on this candle, you can go break even almost instantly. And then if there's like a target up here, then you can target that. But if you enter on the closure of that, you can go break even instantly and then catch your trade. It's definitely more risky than the first trade you took, but it's still valid. Yeah, I mean, once you get a win, there's no reason to come back into the market, because then you can just possibly donate that win back to the market. So be very content with taking a win and just moving on, because there's no point to rush anything, especially if you're with Apex. Like if you're with Apex, like you're only supposed to be like taking small wins anyway. So if you're going higher risk, making that like almost full win, then there's no reason to try and make more money with these firms than what you're already making. Especially once you have like a bunch of accounts, like as I have like 18 accounts right now. Like there's just no reason, like if I've got 18 accounts, 750 times 18 is a lot of freaking money. So like there's no reason for me to try and like push that even farther than what it is, you know what I'm saying? And I mean, I started all like just how you guys were, right? I started with one account, making small amounts, and just kept like scaling that. I went from one account to 3 accounts to 5 accounts to 8 accounts to 10 accounts to 12 accounts to 18 accounts now. So it just kind of comes with time, but just keep letting those small ones stack up and it'll pay off. Oh yeah, it'll come, trust. It will come. Exactly. Yeah, get into the mindset that you already have the accounts, and it'll make it a lot easier. Hey, it all comes with time, Rat. Just keep working at it. Of course, boys, of course. Anyone got any more questions or anything? Alrighty, well, that was a pretty packed lesson. We went over a good bit. Hopefully, I didn't get like overcomplicate things for you guys, but I think all those things are very, very necessary for you guys to learn before we move forward, and will help you a lot with your trading and just understand why to take trades, when to take them, and kind of just understanding the market for what it is. Tomorrow will be a risk management lesson, and we'll be going over psychology as well. We'll be talking about why everything's not a setup, why you don't have to take a setup every single time, and so on and so forth. So if you guys don't have any more questions, it was a pleasure to be teaching you guys. We're on episode 6 already. We're already kind of pushing through, but it's going to, again, keep getting more in depth day after day. Monday and Tuesday of next week is going to be a really good class. I'm very excited for that. And you guys will understand gaps in price a little bit more and just understand a lot more things moving forward. But with that being said, I hope you guys have a good rest of your day. Trading tomorrow. Hopefully everyone doesn't overtrade. Take it easy. And I'll see you guys tomorrow morning for the daily live stream. Deuces, everyone. Have a good one. Bye-bye.